Associate editor Daren Fonda wrote the story, and he joins us now. Daren, thanks for coming on the show.
Thank you.
So obviously, ugly times for Bitcoin. Are we going to look back on this and say, okay, this whole cryptocurrency thing was just a fad, or is this just a tough time and all assets go through bear markets?
I think crypto is being really hit hard right now by tighter monetary policies and rising interest rates. And as the Fed tries to fight sky-high inflation, there's a lot less demand for risky assets, and crypto is one of them. You don't really get any cash flows in any crypto, and it's very hard to value cryptos like stocks or bonds. And I think there's a lot of fear right now going on in crypto markets. Bitcoin is down more than 50%, and that's raising a lot of questions about what is it actually good for other than trading.
Yeah, that is a good question. But those people who would love to make some of those big profits we used to see in Bitcoin are wondering, when the Fed stops hiking, if we think rates aren't going to go up anymore, is that bullish for Bitcoin? When should they get back in?
It's extremely difficult to time an investment in Bitcoin. It's highly volatile and it has no intrinsic value. Some people would argue that it's like digital gold, that it's a store of value, and that it can be a hedge against inflation. But the jury is really out on that fact. And we may now be in a crypto winter. Another problem is that crypto has become highly correlated to tech. And if that continues to be the case, it may not add much diversification benefits to a portfolio.
Hey, Daren, I want to take a look at another spot in the crypto space, which was the big blow up of the stablecoin Terra. Does that mean that stablecoins aren't really stable?
So Terra was kind of an unusual animal. It was a so-called algorithmic stablecoin. It was trying to hold a peg by linking to another stablecoin called Luna. The whole thing collapsed. It wiped out around $40 billion. And it really raised a lot of questions about whether algorithmic stablecoins can be trusted to hold their value. That's not necessarily the case with two of the largest kind of traditional stablecoins, which are Tether and USDC. Those ones have held their pegs, but I think there's still a lot of questions about how stable stablecoins will really be and whether they will actually make a leap from crypto markets, where they're used for trading and liquidity, to standard finance, for payments, for remittances. There's some evidence that that's happening, but the transaction fees can still be quite high.
So Daren, let me get this straight. I could buy one of these stable coins, and if everything goes right, I get my money back. And if not, it all goes poof. What's the point?
Yeah. Ben, I don't know if that's exactly the case. It's definitely true that things went poof in Terra. I don't think necessarily that's going to happen with USDC. Tether is a bit opaque about its holdings, what its reserve assets are, but there definitely is risk in stablecoins. That said, they are taking off in emerging markets like Turkey, so their use cases are increasing, but there's still a lot of questions about their security.
Hey, Daren, Jack Howe. I'm a crypto skeptic, so I'm now doubling down on my allocation of zero ever. But if someone's asking me, they want to buy something, but they don't want to take too much risk, I'm tempted to tell them, forget the Bitcoin, buy something trashy where you can get a skajillion coins for the price of a Big Mac. That way, at least you don't have to put up too much money. What would you tell that person?
I would say be careful. Those tiny little tokens don't trade on the major exchanges, and you can still lose your shirt in them. You don't want to obviously put a lot of money into any of these little things. Bitcoin is the largest and most liquid crypto. A lot of advisors would say you can't really go wrong if you put 2 to 3% of your portfolio in Bitcoin, but you probably don't want to put much more than that in there. There's another way to gain exposure to crypto, which is through stocks. There's a lot of stocks out there that have blockchain exposure. There's companies like Coinbase and Robinhood that are exchanges. There are payment apps like Block and PayPal. And then there's companies like NVIDIA, which makes chips for Bitcoin miners. And there's a bank, Silvergate Capital, that's trying to become a kind of crypto services bank. And they have another business as well in kind of more traditional banking. So these are kind of the safer ways to play the growth in blockchain technology and maybe some of the tokens in Bitcoin as well.
So those stocks sound interesting. Thanks so much, Daren Fonda. Thanks for coming on.
Thank you.